But before we get there, stock of the day is Insignia Financial, and the financial services company announced Chief Executive Renato Motta would step down at the end of February. Insignia Chairman Alan Griffiths said that the company is looking for its next CEO to fill his position, and shares of Insignia are currently down by over 9%, which is quite a fall. So Jun Bei, what do you think of Insignia?
Look, I think it's in a very, very tough spot. It has purchased quite a few platforms in the last few years, a major acquisition, and it's in the process of integrating those platforms. At the same time, it's embarked on a huge sort of cost out program as well. And then now you have the CEO gone. It's got a lot of debt, so it's just got everything going against it for this company. I think certainly, today's announcement really unnerved the investor that thinking potentially there's downgrade coming, and they already had a couple of downgrades already. Result was not flash. So look, it's in a very tough spot. It's very hard to step in and buy. This company feels like it's going lower. So
kind of a big fat avoid.
Yeah, absolutely.
Yeah, fair enough. Adam?
Look, one of these things about Insignia is that they've bitten off probably a lot more than they can chew. And what's happened is that from sort of 2 years ago, they've had this such a meteoric rise and they brought ANZ's financial planning group. They've just bought MLC's financial platform and the financial planners. And Renato was really only there as a caretaker for the business going forward, and then was moved into the CEO role because they basically couldn't find anybody else. And so it's been moved in there, and now it's a bit of a shock actually that because there's one thing that he's done quite well. He's gotten rid of a lot of the dead weight in the financial planning side of things, and I dealt with a lot of financial planners that got moved because they didn't write enough business. And so he either said, if you're on the platform you're on, and if you're not, well, thanks very much, see you later, and you can find somewhere else. It was a bit of a hard, tough love kind of thing, but that MLC acquisition I think is dragging on a little bit longer, and I think that the further downgrades and potentially now Renato leaving, it does show you that this business isn't very easy. And it reminds me of the AMP days. It reminds me of the Professional Investment Services, PIS days, where they were the largest in Australia. They were the biggest. They had all these financial advisors, but then it's full circle again. They all then sold off, and then they've, sort of the demise that's happened. So for me, it's an avoid as well. I wouldn't be going anywhere near it. I think that there's still some more stuff that needs to come out of this one. And with the no CEO, Renato, with him leaving, there's no real leadership at the helm. And that's a big scary thing for a share like this.
Particularly in this environment. It's not really what shareholders want to gravitate towards. You want sort of some earnings stability, steady. You want a strong balance sheet. We know all the textbook sort of things that you're going through when we do have high rates and this geopolitical risk.
As well as then financial planning has come under such a huge amount of pressure from the Royal Banking Commission and everything else. And so lifting up those pay for IFL or Insignia they have to raise prices. Your financial planners and the compliance regime is massive as well. And they don't really know what somebody in Burke is doing versus somebody in Perth is doing, and the business model is very, very tough, and we're seeing that in the share price today.
Easier ways to make money, possibly.